With new capital flows entering into the crypto sphere for the first and second day of the new year, it is time to be following up on one of the more impressive charts of 2021, Matic, that is, in seeing what is expected for Q1 of 2022. With that said, welcome back to EllioTrades channel. I'm your host Krown again today, and we are going to do a bit of a follow-up on one of the more interesting charts that we saw, especially last year. And I think we started talking about this channel maybe like October, November, and discussing long-term upside price targets. We spoke about some pretty exorbitant ones, some good clickbait ones, obviously, but we did hit our first major ones, that being the 2.25 region and then the $3 region successfully. So I wanted to come at it again today and talk about kind of what is expected for one of the better charts that we have seen in this past, 4 or 5 months, and what to expect next. We'll also do a very quick analysis on Bitcoin and Ethereum as well, if time does allow. And with that in mind, I want to let you know that if you are interested in a more in-depth Bitcoin analysis, if that sounds like something that would be valuable to you, I do exactly that on my own channel. There is a link in the description below. It is the Krown Crypto channel, as I did recently rename it. All right, cool. So let's jump into it right now. I guess we'll just briefly go over a couple things on Bitcoin that I think are relatively interesting and something to be aware of, mostly because, as most people in this market know, whatever Bitcoin does, pretty much everything else does as well, to a varying degree of strength or weakness. Now, with that in mind, the data that I'm specifically referencing here is the global leverage ratio, again, representing the ratio between leveraged positions and spot positions. And this has never been higher ever. Now, we do expect this number to naturally go up over time as Bitcoin now has, a futures-based ETF and probably a spot-based ETF, probably sometime this year, I would imagine. And naturally, as the market cap does grow, this number should theoretically somewhat go up over time. Problem is, you want that to go slowly up over time. And as you can see right here, we are at all-time highs ever since I've been mining this data, and not at all-time highs by like a small margin, but by a rather massive margin. And anytime that we have seen this get above the 0.1% region, that representing leverage positions versus spot positions, well, those have all resulted in downside moves, all of them except for one of these iterations, that being, of course, your summer bear trap at $30,000 right here. Other than that, the other areas that are similar, or in this case, within that critical zone, would be, of course, the April prior highs at $65,000 before the summer dumpola party, the flash crash that we did see in early September from $53,000 all the way down to $40,000 in just one day, and then the more recent one in the November highs going from about $60,000 down to $40,000. So I thought that deserved a bit of repeating over here. Of course, when it comes down to it, I can always bring you back to this chart. And it's as simple as this. Below 45,500 bad, very likely going to be testing somewhere down around that 4th of December wick lows. Let's just call it low 40,000s. Of course, still above there. I actually do look at this asset as still macro bullish, as we still have higher lows long term, but below $41,000, that does start to get destroyed, and we do have to consider other situations for the general market. Of course, above $52,000 would be quite good for the short-term, medium-term BBWPs, insinuating price action and targets back up to $58,000 to $59,000 territory, and then above $59,000, it's time to be talking about moves back towards prior all-time highs and whatnot after that. Okay, cool. So again, very, very simple stuff right there. Again, how many times we bounced off this damn bottom side support? Well, 1, 2, 3, 4. Usually the 5th time's the charm, but overall, I'll say this, while I do suspect that it probably does give at least one more bounce here, I've stopped actually trading that level myself, just for full disclosure. Not interested in taking that trade again, mostly because I actually cannot have my full focus on the charts for these next 48 hours. So that's just a personal thing, but just for full disclosure. Okay, cool. So let's move on into Matic here, and then maybe we'll swing back to Ethereum a little bit later. And again, we brought out this chart, I think it was like October, November. We spoke about some pretty ridiculous I think the thumbnail had it had like the best clickbait target ever. I think it was something in like the teens, in like the middle teens, maybe it was like $17, whatever it was far out there. And hey, maybe it does hit those levels, perhaps years down the road. We're talking like 5 to 10 years down the road, but we did hit our first couple major, more relatable targets that at the time were quite far away, that being the I think it was 2.25 or 2.5, and then definitely around $3. And so I wanted to come back to this chart now today, not to toot my own horn, but to kind of go through the next sort of, I guess, areas of interest, so you can see how these things operate over time, and then you can go do it yourself. So first things first, what is important about this chart as we start the new year? The monthly has closed, and the monthly has closed on a new all-time high on a closing basis, which is always going to be good in my book. And while that does sit in the long-term bullish bias, at least for myself, for this asset, with major targets as continuation to the upside, which we can just briefly go over right now, still looking at about 330 as the next sort of basing area for the next consolidation. More long-term, perhaps a month or two down the road, assuming that invalidations that we're going to go over soon enough will not be met, which of course they can be, I would be looking towards the $6 to $8 region, actually, the $6 to $8 region, with a stop along the way at about 4.5 for what it's worth. Anyways, so that does set in the bias for me long term, but that doesn't necessarily mean that Matic is destined to just go up in a straight line, as pretty much nothing is. I mean, this is quite rare over here, although it definitely does happen, but ebbs and flows are the name of the game. So let's go down to the daily right now and look at what the relatively shorter term timeframes are looking like. And for right now, Matic still holds a beautiful uptrend. Obviously, always going to like that. But are we getting any sort of indications of a pullback first to open into this month, which perhaps could be a major opportunity? Again, given my natural or my analysis on it, I do think so. Again, everything is a non-zero probability to fail, but we can come up with areas for that, which is what actually makes analysis important to begin with. I think a lot of people new to technical analysis might not understand that, but fair enough. It is limited. We're just talking about statistics and probabilities. That's it. There's no magic with this. There's no I called it or anything. You can't actually do that. It's just numbers is what it is. So looking at this right here on the daily, we do have a range. We do have an uptrend. All of this is good, but that doesn't mean that we can't see this asset pull back a little bit further. So how would I chart this right here? For the daily range, that is quite obviously between 240 to the downside versus 266 to the upside, meaning that any sort of a daily, or let's call it a 12-hour closure above or below those numbers will very likely beget the next sort of continuation phase. In this case, if 240 is closed below on one of those time frames, I would be looking for Bitcoin, Matic, and Polygon to pull back somewhere down around about 220, give or take 5 cents from that target. That's where I'd be looking for the next higher low. Personally speaking, I do think that actually likely does happen. In fact, the reason why I say that is because we do see momentum oscillators, namely our daily stochastic, is currently downside angled. Now, this is a corrective posturing right here. Again, just a momentum oscillator, that's all. So I do suspect that likely does lead up towards your next higher low. The question is, how bullish exactly is this asset? Now, for the more aggressive people, well, this is a fine setup right here for what it's worth. You have an obvious invalidation very close to a potential entry at 239.5 to 240. But that is up to you, obviously. Some people are more aggressive, some people are more conservative. And we spoke about this on a video from last week, and I think people really gelled with that sort of interpretation. This would be the more aggressive of those. The more conservative is obviously down around 220. And below 220, we do look for greater corrections at minimum down to 190-ish region. Now, keep in mind, below 220, no longer more immediately bullish on those medium and higher term timeframes. So we're probably looking at a much more prolonged correction, maybe even a full in reverse, which is definitely possible. But until it really comes back down below 220, that's not a big topic of consideration, at least for myself. I'm still generally biased towards upside continuation. The question is, where do we pull back first? What you'll also notice is rather interesting about this chart is that the daily range highs at 266.5 is actually going to be correlated perfectly with the daily stochastic momentum turning up as well, as that condition will be met above 266 actually. So any sort of a daily closure above there on that range resolution right here would not just be a range resolution implying a move back up towards your $3 highs, but you'd also see the daily stochastic momentum turn up as well, which is all good. Let's take that one step further into one of my most favorite indicators, that being the BBWP over here. Indicator that measures volatility and then ranks it into a percentile format. So Why am I focusing on this right now? Well, volatility measuring the dispersion of returns does imply that when it is relatively low, as it is a mean reverting indicator, is set to, well, more or less likely explode. It's kind of like programmed in there. So the last time, or the last few times that we've seen volatility this low, comparably this low, that resulted in upside resolutions were back here in November 25th before this run from 150 to 260. That was a 73% run. Keep that number in your mind. And this run over here, of course, in October, middle of October, before going from 120 to 230, actually almost a 94% move right there. And then, of course, this one over here, coming in from your August reversal, precipitating that move from about $1 even all the way up to 190 for an 85.5% move as well. So that can kind of give us an idea of the percentage to be expecting upon validation of a breakout to the upside in this case. To the downside, again, we already kind of have our targets set out right there, but let's just play around with numbers. And let's say that, hey, this asset, Matic, does break above your $266.50 range highs. Well, what would 70% up on top of price action look like? That actually gets you around that $4.50 number that we did say was likely for a bit of a short-term pullback. If we go for the more aggressive of those estimates, probably looking around 90%, and that actually gets you right around $4.50. So, you know, if that does happen, I'd be looking for the following weeks to kind of set a bit of a time frame on this. The following weeks after that confirmation to trade up towards those price actions, and of course we come back to it as well. Is there anything else that I want to speak about on this one, or have we kind of beat this horse to death? You know what? I think we beat this horse to death. Yes, there is more things, but we don't necessarily need to go over them in a video like this. I want to make this more relatable. I also wanted to go quickly over Ethereum, actually, just because Ethereum is looking decent off the lows right here. Yes, you still have a downtrend, but you do have a reversal formation in progress here, which is a falling pizza, a falling wedge. And but Ethereum, better said, has a history of kind of playing these out for these good reversals. The most recent one was your September higher lows at about 3,000, and the one before that was your summer lows at about 2,000. And just as a aside, you got 2,000, 3,000, and now about 4,000 over here, just for what it's worth. Anyways, there are two major things to be aware of with a formation like this going on. First and foremost, while it is technically speaking, statistically speaking, a more bullishly resolved formation, which would have targets up to 4,500 and 4,600, and very likely leads up towards a move to like 5,400 overall in the following weeks upon validation. You do not have a validation of this as a reversal until you actually pop back up and trade above the last lower high, which is 4130, the exact same damn area that we were focusing on so much for the past 2 to 3 weeks that had failed so much. And of course, that means that it is a very important area. So above there, I would start to say that Ethereum is once again resolved. It is in a good posturing and very likely going to initiate moves into the mid 5,000s, probably even deeper over time in the following weeks. And what is the other thing that I wanted to say about this? We played at a corrective target at 3,600, so I don't really have anything to add right there. If it does trade lower, let's say Bitcoin breaks down to 4,100, I guess I'm looking towards 3,400. I'm not necessarily biased towards that right now, but fair enough. And short-term timeframes looks like they want to trade back up towards about 39.50 or so. Again, that doesn't really do anything for the higher-term timeframes, but the 41.30 area, very important for the macro structure. Short-term timeframes, however, looking good for probably one more push up towards 39.35, 39.50-ish region. And of course, invalidation on this one, long-term, well, it's going to be below your current lows. So hopefully that was helpful. I think this is a good place to shut off this video. And I'm curious if people are interested in me following up on a lot of those ones that we covered earlier. They take time, obviously, when we're looking at higher term timeframes, but perhaps a good exercise in patience as well. So hopefully that was helpful. And I'll definitely be keeping an eye out in the comment section. Thank you very much, and I'll see you in the next one.